Hey everybody, hope everyone's doing well and had a good day. This is a brief recap of the Emini 5-minute chart for Thursday, March 20th, 2025. If we look back here on the open, really strong rally, but I wanted to show the 15-minute chart here on the top right of the screen. You can see the rally, really strong series of bull bars, very little overlap, bars closing near their highs, big bodies, small tails. It's a really strong rally, but it reminds me of another rally. I don't know if I ever showed it here, but basically the point is, I don't think I can find it, but the point is this rally, as strong as it looks, you have to look to the left, and how much of this rally is actually breaking out of the trading range to the left. Big up, big down, big up. We actually have not even broken out of the trading range yet. So as strong as the rally is, second leg up likely, yes, but it's within a trading range. So we may get a deep pullback first and then a delayed second leg. So that's the point of what I wanted to say on the rally on the open. Very strong rally. On the 5-minute chart, you can see we started to have pullbacks, and we ended up getting actually 1, 2, and 3 pushes up to bar 16. So after 3 legs at the top of a trading range, remember, big up, big down, big up. We have not broken out of the range, so no matter how strong this rally looks, you can't be too confident buying during a bull breakout when you're at the top of a trading range if it has not broken out yet. So after 3 pushes up, the bears get a 3 or 4 bar bear micro channel. This is strong enough for a second leg down, so the first reversal up will probably fail. And the bears got their quick second leg on bar 22 and eventually got another pause and a third leg down to bar 26. Now, the sell-off down to 26 was tight enough, even though it's 3 pushes, 1, 2, 3 legs down. It's a tight enough channel for the bears that the first reversal up will probably fail. And this entire sell-off from 16 down to 26 will probably get a second leg of its own. So 26 through 28, decent rally, but probably minor. It's not a very significant trend line break, and it depends on how you draw the trend line, but for me, maybe it's the 16 high, 21 high, and you can see 27 poked above the trend line, did not close above it. 28 actually broke above, but then got no follow through. 29, and then there's a bit of a give up bar. 30, still strong enough rally, probably buyers below second leg up. Well, in this case, bar 31 was the second leg for the bulls. You can see we got a test of the high close of bar 28, the high close of the rally, the 3 bar micro channel. So not that it's a parabolic wedge shape, but 3 pushes down, but tight channel. So when there's 3 pushes, but it's a tight channel, you have to assume it's a breakout on a higher time frame. We can actually see it on the 15-minute chart here. And the channel down is tight enough that the first trendline break will probably fail, and the first reversal attempt will probably be minor. I mentioned that 26 through 28 was strong enough for a second leg. In this case, 31 was that second leg, and you can see the reaction by the traders up here. What happened? Maybe bulls buy up here, trapped by bar 30. Bar 30 is a really solid bear breakout bar. Open on its high, basically close on its low, not much overlap with the prior bar. There is a problem with it. We're not breaking below 26. We're still within the rally, so big up, big down. Still might get a second leg up, but 30 really damages the bull case. And unless the bulls do something really special on the next few bars, the bulls might be in trouble here. I also want to talk about day structure at this point. Big rally on the open for the first 15 bars or so, but not breaking out above the prior day's high. And when there's a rally like this on the open, it's low probability, maybe 20% chance that we continue to rally in this way for the entire day. Also unlikely, maybe 20% chance we have a big reversal and sell off all the way down to a new low. About 60% of the time, instead of continuing up or reversing all the way down, the market goes sideways for the remainder of the day. And the point of saying that is, at this point, bull trend, not very likely. Bear trend, not likely. Some sort of trading range day or reversal day, more likely. So bulls are hoping it's a bull trend. Big rally, maybe a complex two-legged pullback, one, pullback, second leg trap, maybe trend resumption. But bar 31 is more new information. Traders, and we can go through both sides here, bulls buy the close, trapped on 30, using 31 to exit. Longs if they're trapped into buying. And then we have bears. Bears, maybe they didn't want to sell after a 4-bar bull micro channel. Strong enough rally, second leg up. Likely, first reversal down will probably fail. Bears miss the sell 30. They don't take the sell below 29. Maybe the probability was average. Or if they take the sell, they didn't trade as big as they'd like to. They use 31 to scale in or to enter shorts. And the point is, everybody sells here on bar 31. And when that's the case, the market has to go lower to find traders willing to buy, to find bears willing to buy back shorts for their profits, and to find bulls looking to go long. As a bull, are you eager to buy above bar 31 here? No, of course not. We just had this rally against a strong bear channel, or I should say tight bear channel. A trendline break, but not super significant, not super strong. And then 30, an even stronger bear breakout. And then 31 telling us everybody's selling up here. So it looks like we have to go lower to find traders willing to buy. Bears start getting a 3, 4, 5-bar micro channel, second leg down here. Is there any reason to buy here? I like to look at the stop order perspective, and there's really no stop order buy set up here. 26 was okay. It's 3 legs down, bull bar closing on its high. But compare that to over here. Maybe 31, leg 1, deep pullback, 33, leg 2, and then maybe leg 3 here. But where's the good signal bar to buy? And then we got a give up bar, 36, maybe a measuring gap. What about buying, 38? Strong enough selling and tight enough leg down that the first reversal will probably be minor. In other words, the sell-off down to 36 will probably get a second leg. And I don't want to make this a bar-by-bar review, just want to keep it brief. We can see what happened. Minor reversal, minor second leg. We're actually in a trading range here. I do want to talk about this part, actually. Bear breakout to spike, pullback, channel phase. What happens in the channel phase for the bears? Traders buy at each new swing low. Bears are buying to buy back shorts. Bulls are buying to go long for scalps. So a good reversal bar, good bull trend bar, 41. It's a possible lower low double bottom, but the channel down is still tight. The first reversal here, probably minor, but strong enough bar for a second leg. 42, a good bear bar, but at the bottom of the range where there's buyers. Probably have to go higher to find sellers. And 41, trapped traders below. If you sold to close 40, trapped on 41, you might use 42 to buy back shorts, and you might not look to sell again until the market is higher. 43, 44, strong pair of bull bars, but what's the context? This is a small trading range after a pretty decent sell-off. And if we think about the market cycle, spike, pullback, channel, the channel is evolving into a trading range, and we're testing near the start of the channel, which often becomes the top of a trading range. So we're testing resistance here. What could 44 possibly be? Could it possibly be a second leg trap? 1, pullback, 2? It might be. So the bulls really need follow through here. We're stalling at the moving average. We're stalling at breakout point. We're stalling at what might be the top of a trading range or a bear flag, and then bad follow through 45. So when we get 45, it's fairly common when bulls need one more bar that they don't get the one more bar. They get a disappointing bar like 45, followed by a give up bar 46, possibly. And I see that happen fairly often, and we got to give up here. Same thing happened here. 28, bulls really need more buying. We're hardly breaking the trend line here at this point, and then 29 was a disappointing bar for the bulls, and everybody bailed out. And I see this as a similar situation. Second leg up in a trading range against a tight bear channel. Bulls need one more bar. They don't get it. So bears and bulls both begin to sell. And then we start to have a give up bar, 47, probably going lower. Breakout to 48, strong enough for a second leg. Problem with 48, it might be leg 3. And after leg 3, you might get a deeper pullback. You can see we pulled back all the way up here to bar 52, 4 bar bull micro channel. That's enough buying, big down, big up, to put the market sideways for at least a few more bars, because now the bears down to 48, this leg down to 48 will probably get a second leg down because of the trapped traders above, but 49 through 52 was enough buying that there are trapped traders below, and this will lead to a second leg up, and that's what we got. So big down, big up. 54, is it trend resumption for the bears, or is it a pullback for the bulls? In this case, it's a pullback. Traders buy where they got trapped down near the 48 close. We rally for a second leg, and this was the second leg for the bulls. 1, pullback, 2. Even in here, you can see it's a channel. We have tails above and below bars. The market is rallying, pulling back, rally, pullback, rally, pullback, and then a buy climax. 57. Also retesting that breakout point, the bar 46 low. And then finally the bears get their second leg. So leg 1, complex 2-legged pullback, and then a second leg down. And I say leg 1, but it might be a late leg, leg 3. It's a bear channel, and down to 61. Again, might be leg 3, 1, 2, 3 legs down. So more dangerous to be selling down here. Might need 10 bars and 2 legs sideways to up. And ultimately, this bear channel would convert into a trading range. 62, strong enough breakout bar, probably buyers below, second leg up. 64, 65, strong second leg. Resets the market cycle to a degree. This might be a leg 1. Traps traders below. 63 is a bad stop order signal bar. 64, 65, traps traders below. 66, sell vacuum, test of support. So 66 is a breakout pullback. The bulls breakout follow through. 65, breakout pullback. 66, second leg up to 71. You can see, again, testing resistance, testing swing highs to the right, or to the left. I'm extending this to the right. 71, testing swing highs to the left, and it's a second leg up, high in a trading range, which leads to a lot of selling. 72. 72, strong enough after a couple of legs up, will probably get a second leg down. But where are we as far as location? Do traders want to sell here? We just had a tight bull channel up to 71. Good trend line break by the bears, but the bears might instead of selling down here, they might look to sell above swing highs. Sellers above 71 here on 76 and 78, 3 legs up, top of a trading range, and 72, enough of a bear breakout, probably sellers above, second leg down. And in this case, at least on the regular trading hours chart, the second leg that the bears got was only down to 78. That's going to do it for this recap. Thanks everybody for watching. and I hope everyone has a great night.